Welcome to Flash Instincts. Today we're going to look at senseonics, another biotech super hot penny stock. This has a lot of momentum. A lot of people are supporting this company. They have a lot of things going on with their glucose monitoring system. Now I'm going to look at the charts. If you like this kind of content, make sure you hit the red subscribe button. This is not financial advice. Everything you see and hear is for entertainment purposes only. We entered the golden cross. A golden cross occurs when a 200 MA and 50-day MA cross one another after bear sentiment. So once it enters the golden cross, we have bullish sentiment. This occurred on the 18th of December 2020. We entered the golden cross, and from that moment, a span of 36 cents, senseonics rose all the way to $5.61, $5.70. It peaked very high. However, due to the biotech sell-off, due to the tech sell-off, due to the XBI index sell-off, senseonics was also hit hard. You see this red arrow? This is when the golden cross retracts and re-enters the death cross. The death cross is the opposite of the golden cross when the 50-day MA goes under the 200-day MA. This means that a bear sentiment has evolved into the stock pattern. Now, senseonics around March 5th, 2021 entered the death cross, and it kept going down for the next 3 months. However, now in this video, we're going to look at a possible reversal. Perhaps we are re-entering the golden cross. That's how the stocks go. They are volatile. They go up and down. So when we enter the death cross, you should sell all your shares at that moment because it's going to go down further down. Now, once it went down, you'll notice that these yellow arrows, these are extreme low points of senseonics. This chart, you'll notice, is eerily similar to all biotech ETFs like XBI. It's similar to Sense Surgical, and it's saying that the entire biotech sector is resonating with one another. All the money is flowing in and out together, and perhaps there will be a reversal together. So these yellow arrows, they're showing the super low points of the last month and a half for senseonics. 1.72 was a good entry point. You'll see that it bounced off of that, a triple bottom on this range, 1.7 range. Now it's attempting to go up. You see on April 29, 2021, senseonics had a head fake. It attempted to reach back, attempted to go above the 50-day MA and towards the 200 MA for a golden cross entry, but it failed. It was not able to go up. You'll see a double top and a head and shoulder pattern, which was saying for the short term is going to go down. The head fake was a fake. It could not go up. It went back down to the 1.7 support region, this heavy support region. It bounced really well again. You could have added shares if you wished on the 1.7. If it reaches this region, you'll see this super red box in highlights. This is the super buy zone. So right now at the current situation, May 20 to May 23, 2021, senseonics, again, the trend line is showing it, the 50-day MA and the 200-day MA attempting to cross over one another. This is the second time it's trying to do this. All right, it's trying to break this dynamic resistance point of the descending wedge. It is trying to break it with huge volume. If it does, it will be a confirmation of a breakout. It will be a confirmation for a reversal. It will also show a re-entry of the golden cross. This would give huge bullish momentum. Now, senseonics has the ability to go back to $5.70 because they have enough funding to last them this amount of time. They have done a direct offering previously, and they have a lot of hard cash at hand. You'll notice that these pink arrows, they show a double bottom. These are short-term bullish signals. Furthermore, there's multiple bullish signals interlinked to one another. The descending wedge, okay, this last 3 to 4 months of downturn, and once it goes near the dynamic resistance point with huge volume, it has the ability to break out. Breakouts mean going positive, going bullish. Now, again, you have to pay attention to this arrow finger moment where I'm showing you. This is a new attempt to enter the golden cross in the 6-month trend line. This means that it really is a vital, pivotal point for this company, for this stock. If the overall biotech sector starts becoming bullish, if all of the biotech companies like Sense Surgical, Butterfly, CRISPR, if Fold Technologies, if all of them are able to reverse and go bullish, so too will senseonics, because the entire flow of the money will start entering this sector. Now, you see this green box, this little box that you see right here? That little box is saying, hey, that's the point. That is the important point where it must get a lot of volume. A lot of traders must come in. Also, keep in mind or bear in mind, you're looking at a very short term period. If you wish to enter, you can enter, but it is still very risky. Right? You might want to have a stop loss because it can still retract and go back to that support. It could have another head fake. However, at the moment, it does not look like a head fake. It really does look like huge volume may in fact come in, and Senseonomics should potentially have a huge bullish run. The next price target we see is $5.70, and if it goes above it, if it suddenly surges with huge volume and momentum, if it goes above towards the $750 range, anything in between from $570 to $750, if you're able to have huge shares, if you're holding shares, that is a sell point. That is a sell point. If it reaches that moment anytime within this year, that is an extreme selling zone. That means that your stock has risen over 300 to 400%. That's astronomical gains. You have to learn how to sell as well. You sell in 3 moments. You sell first at 570, 20%. You can sell another 50% when it hits 650. And if it goes to $7 range, you sell everything. Okay? That's how you can take profits for Senseonomics. I hope I was able to help. If you like this kind of content, make sure you hit the red subscribe button. Until next time, guys.